The average inflation rate in Singapore is between 2 to 3%, which is higher than most Singapore bank deposits rates. That's why putting all your money in banks could potentially erode the value of your savings, making it harder to achieve your financial goals. That's why it's important to learn how to save and invest. A good way to kickstart your investments is with a simple product called the STI ETF. STI stands for Straits Times Index. It is the benchmark index of the Singapore stock market and is comprised of the 30 largest, most actively traded blue-chip companies listed on SGX. These companies are large and well-established, with a history of stable earnings. Singtel, DBS, OCBC, Keppel, Thai Beverage, CapitaLand, Singapore Airlines, Singapore Exchange, the list goes on. You'd probably like to invest in these, but are not sure where to start, right? Well, for as little as $300, you can by investing in the STI ETF. ETF stands for Exchange Traded Fund. An ETF tracks the performance of a particular index and aims to produce a return that replicates that index's performance. Hence, an STI ETF tracks the performance of the 30 blue-chip companies on the STI. By simply purchasing one STI ETF unit, you achieve instant diversification, gaining shares in all 30 companies. As these companies grow in value, you share their profits. And year by year, your accumulated capital gains increase as the companies grow with time. For instance, let's say you invested $1,000 in STI ETF in 2005. Adding all the dividends, it generated a 64.46% total return in 10 years, meaning you would have had $1,644.60 by September 2015. The beauty of STI ETF is that you can buy and sell the units like normal shares on the exchange. You can ride the market trends to buy at a low price and sell at a high price. Of course, higher returns always come with higher risk. But by purchasing STI ETF, you're not investing all your money in one company, but spreading it out over 30 companies. When there's fluctuation in the market, the profit of some companies may override the loss in others. In this way, you spread out the market risk through diversification. Currently, the Nikko AM Singapore STI ETF and SPDR STI ETF both track the STI and are listed on the Singapore Exchange. You can use cash, CPF, or SRS monies to purchase these ETFs. To start investing with STI ETF, simply talk to a broker to find out how.